Hey, what's up, guys? It's at the market open on Friday, November the 13th, 9:43 a.m. The market has just been open for about 15 minutes now, and I want to give a quick update on how I'm doing. Now, this past week has been one of the worst week ever for me because I suffered my biggest loss so far with Peloton. So, if you remember from my last video, I sold the Peloton puts for 4-day expiration, 111 strike price when Peloton was at 125, and for a premium of $46. Now, if you have been following the market this week, you probably know what happened. So on Monday, Peloton dropped. It was as high as 132, all the way from 132 to as low as 93. So that's a $40 drop in one day. Why? Because Pfizer announced a vaccine for the coronavirus. So this means that people started to panic sell Peloton, Zoom, or other work at home stocks because they think that the market might be going better because a vaccine is in the process and people will stop buying these work at home stocks. Well, it turns out that, in my opinion, the virus vaccine has 90% effective rates, and it must be kept at minus 90 degrees weather temperature in order to sustain. So it's, to me, like there's still a lot of things to figure out, and still way too early to talk about vaccines. There's the logistics, there's distribution. So to me, like things like that should not be taken at face value. And people here are pretty much panic selling Peloton, so it was an insane sell. So here I was holding a 111 strike price Peloton as I watch it go down to $93. Now, as you can imagine, at 93, I pretty much lose about $1,700 of my money. So I had a premium of 46. So at some point at the low, Peloton was trading at 93, and this contract was worth over $1,700. Sorry, worth over $1,800. So I was down like $1,700 in total, and I was not feeling good. So this is one of the downside of selling puts, selling options, and doing it like with a no spread. So this means your downside is pretty much unlimited, and you will lose as much as all your total investments. In this case, it's $11,000. So I held on as good as I can throughout that week, and Peloton sort of bounced between up and down, and here you see the big candle, it goes back up. So it went up like yesterday as high as 111.80. So at that point, the greed in myself kicked in, and I did not sell it for a small loss. But I learned my lesson. As it went back down, I decided to cut my loss. So I got out when the contract was worth $410. So for a total loss of $364. Not bad. It could have been a lot worse. As I said, it was at $1,700 at a loss. So I cut my loss to essentially $364. Very expensive lesson, and I did learn my lesson. And this is one of the first times where my insurance got called away, and it didn't feel good. So I decided to move on and use this as a very expensive lesson about selling puts. I might start doing spreads to limit my downside, but right now I still think I want to keep on doing what I currently been doing. I'm having good results, and I want to continue doing what I'm doing. So I picked up a ACB, Aurora Cannabis stock. I'm sorry, cash secure puts. I sold the cash secure puts for $38 premium at $6 strike price when it was at 10. Now the reason the premium is so high is because there was earnings the next day, which I did not know about, which is another thing I need to get better at. So I sort of sold this, and then throughout the earning, it just started tanking. And then the next day, the company offered public offering of their stocks. So it went down even further at $7 strike price, $7 price per share. So ACB went down, but now like it's back up to $7.28. So I decided to close it when the contract price was at 51 to get a loss of $13. Cut my loss when I'm run, and that's what I've currently been doing, and I'll continue to do that. So moving on to Fastly, and I saw another cash secure put on Monday for $61 strike price. And as you can see, Fastly is trading at $80 right now, and this is due to the news of the Trump administration going out of business. So Biden's going to be the new president. So that ban on TikTok is now currently unknown, but I think a judge offered a extension of the ban. So Fastly, like, it's a TikTok stock. So TikTok have more time to operate in the United States now. That's why the stock's going up. And like I sold it at 68 when Fastly was at 68, and it's going to expire worthless today for a $35 profit. As far as my long-term stocks go, the Fastly stock, it's averaged at $78. Right now I have $44 profit. For Apple, not so much, $61 profit, 113 average price. Not bad. Apple's trading at 118 right now. So what did I have? I have a couple of new positions today, which I just done. So first is AMD, and I'm selling a 76.5 puts for next Friday for a premium of $43. And right now I'm just like, the market's not doing too bad, and it seems to be pricing in the volatility right now, with the growing cases in coronavirus. And the market doesn't, it's already dropped for the past few days, right? So right now it seems like could be stabilizing, and it's pricing in the virus. And any good news about vaccines is gonna send the market straight up. So, but there is also a worrying trend of rotating out of the tech sector. So that's something to be worried about. Like if it goes out of tech sector, like it could go into other non-tech related stocks. But I'm gonna take my chances. I'd like to buy AMD at 76.5. Like I'm fine if I get assigned to it. So right now for $43 premium. The other stock is DKNG. So right now it's currently down $5. I got a strike price of 38.5 puts for next Friday. DKNG right now just came out of the earning. They beat the earnings spectacularly, and right now it's like going back down because this is sort of the resistance right now. It's trading around the resistance. I kind of want to be like somewhere down here, 38.5 at the support. So I'm also fine owning DKNG 100 shares at 38.5. Just hope that it doesn't crash. It's another coronavirus play because it's betting on sports betting. So if sports is not running, this is going to go down. That's the Fastly puts. I sold another Fastly puts for $68 strike price expiring next Friday. So that's well over $10 above below the current price, which I'm fine for $40 strike price. I'm pretty confident. Again, I'm happy buying Fastly at 68. So the next stock is Microsoft. So 197.5. So I've been watching Microsoft for a long time, and I know that the $200 strike price is a very good support, and 195 is the next support. So 197.5, I'm not really worried about it. And Microsoft is a super long-term stock, and if I get assigned, I get assigned. But that is quite a lot of money. So if I do start losing a lot, this is like $36 premium, I might just cut it off. But right now it's I'm gonna let it work out next week, and we'll see how it goes. So for total, I have about like 100 something in premium ready to go for next week. Not a lot, but I'm going for the safety play. As you can tell from my trading sheets, my biggest profit comes from when I get assigned, when I start doing like wheeling the actual option, the actual stock. So I'm fine with getting assigned, but these are big profits, potential big profits that I'm happy to play with. So yeah, if you guys like this video, make sure to subscribe to my channel, and there's a link to this spreadsheet here, which is live. You can see my positions live, all for free. It's in the description below. And yeah, don't forget to check out our Discord if you want to come in and talk to us all day. And we have a couple of nice traders in the chat room. Be sure to come by and say hi, and we're happy to answer any questions you have. And one last thing, looking at Peloton right now, I'm not so sad about selling my position yesterday because right now it's going like way down again. So yeah, we'll see how it goes. And that is it for this video, and I'll see you guys next time.